Good afternoon, traders. Let's take a look at the latest macro themes driving the markets, focusing on the US dollar, crude oil, and gold. So starting with the US dollar. The US dollar is still under pressure ahead of this week's PCE inflation data, which is a key Fed metric. Following soft CPI and PPI prints earlier this month, PCE is also expected to remain mild. Markets forecast both headline and core PCE to rise by just 0.1% month-over-month. However, due to base effects, annual readings may edge slightly higher, with headline inflation rising from 2.1% to 2.2% and core from 2.5% to 2.6%. And normally, such weak data could push the Fed to a rate cut. But in today's climate, policymakers are likely to remain cautious. The Fed wants more clarity on how incoming tariffs will feed through to prices. And they will also be watching inflation expectations closely before committing to a policy shift. And for now, rate cuts may remain on hold despite growing market expectations. Then, moving to crude oil. With Middle East tensions easing, the market's attention now shifts to the early July OPEC meeting. Saudi Arabia has surprised the market by signaling potential production increase even the prices have dropped. While some speculate this may be linked to a US pressure, the broader view is that Riyadh is pushing back against repeated overproduction by some OPEC members, particularly Kazakhstan. Having carried a heavy burden of voluntary cuts, Saudi Arabia may now be aiming to reassert leadership and restore internal discipline. Oil has now erased all gains made since the Israel-Iran conflict escalated on June 13, which gives both Washington and Riyadh greater flexibility. And looking ahead, the market is watching whether Saudi Arabia scales back its recent 411,000 barrel hikes to smaller increases in August and September. And lastly, gold. Gold continues to consolidate, caught between fading geopolitical risk and uncertainty over Fed policy. The technical picture shows an inverse head and shoulders pattern, which is typically a bullish signal, with a neckline around 34.30. And however, gold failed to hold above that level and has now pulled back for 3 consecutive sections. And despite this retreat, gold remains above key support at 3,300. Holding this level keeps the bullish structure intact, but if the metal breaks decisively below 3,300, it could even invalidate the reversal pattern and open the door to deeper downside. So to wrap up, with US inflation readings in focus and the Fed's next move still uncertain, the markets remain data dependent. Oil's attention shifts from geopolitics to OPEC strategy, while gold awaits a catalyst to define its next breakout. Thank you for listening and have a great trading day.